traders? Happy Monday and Happy New Year. Zach here from the Trading Network. It is Monday, January 4th, and I've got another daily market profile recap for you. So let us dive right in here to the key levels that I was looking at this morning. Key level, first and foremost, was 37.7325, which was the most recent overnight high as well as the all-time high that was broken in the most recent overnight session. Next level was the range high from the December 31st session. Next level below that was the overnight low from this most recent overnight session, and below that I was looking at the December 31st naked point of control. Just flipping over to the market profile here. That is the wrong chart. Go into the market profile here, you can see this is that 37.3825 level I was looking at, and then that 73 level, and then last but not least 23.25. This was that point of control from the most recent regular trading hour session before today's session. So with that said, let's go back to the trade plan here and get into the news events and the summary. So news events, we had the OPEC and JMMC meetings, which I referred to last week. So we had those all day, and we did have some high impact from that, or possible high impact from that, I should say. But I would say that more importantly, it was the seller stepping in and saying that we could not hold above the prior range high. So as you'll see here in the summary, I stated that overnight inventory was net long, which means that the majority of price action was above settlement price from Friday. And then we were looking to open above range and value. Now going over to the profile here, opening above range and value from previous session means that we are looking to open above the range, which was 37.1775 to 37.53, and above value would be the value area right here, which was 37.1925 to 37.3825. So if I zoom in here on the profile, we will find the O period up here, right around 37.5875, and that is where we opened. So just to clarify, we opened above range and value. When we open above range, it's inevitable that we also are opening above value area because the value area is of course contained within that range. So today I was looking for price to hold above the prior range high from December 31st at 37.53 for upside directional conviction to continue. If price could hold above that level and use that as support, I was going to be looking for a move to the overnight high, back to that overnight high level at 37.7325. If we could not hold above that prior range high, I was going to be looking for a rotation back down to 37.38 and ultimately lower. Again, 37.38 was the overnight low from the most recent session here, leading into this morning's gigantic 107-point range here on ES. And let me just see here. There we go. Scroll up a little bit. So just to clarify here. So again, looking for price to hold above prior range high from the 31st, which was this 37.53 level. Zooming in on the profile, you can once again see that we opened just a handful of points above that, around 58. We could not hold that level on open, and we moved below. So according to my summary, my thought process this morning, because we couldn't hold this level, I was looking for a move to the overnight low and then ultimately lower, which we got much lower than my final downside target. So scrolling down a little bit here, you can see the scenarios once again. Upon open, I was looking to see if we were going to get acceptance above that 37.53 level. If we could hold it, then I was going to be looking for a move up to the high here. If we could not hold 53, then I was looking for a move back down to the low. And I believe my lowest downside target was actually that 37.31 level. So I personally was not expecting that much directional conviction. Obviously, hard to anticipate a 100-point range, but we got a lot lower than my lowest downside target. So moving down into the summary here, my upside targets, if we could hold that 37.53 level as support, were 37.60, 37.63, 37.67, 37.76, and 37.85. And obviously that 73.25 level was our all-time high. So I pulled those other targets. I actually pulled them from my VWAP deviations and my Fibonacci pivots. So you can see here, obviously, because we got such a huge move down, the VWAP has shifted quite a bit. But you know how price started off. Let me see if I can back out here. I'll remove these drawings to clean it up just a tad. All right. So upon open, you can see that we had the second upper deviation of VWAP matching up very nicely with R3, Fibonacci pivot R3. So I had my let's see, that was my second to last upside target hit at 37.76, and I also had my last downside or upside target, I'm sorry, in this 85 region. So upon open, you can see open was right here. If I look up, if I put my cursor up in this area, it was looking like at the time, you know, this third upper deviation was around this 83, 85 area. So that was reasoning for those higher targets above our all-time high. And again, that's how I usually get those targets. If I'm not taking a measured move from a profile, then I'm typically using Fibonacci pivots or my ZWAP bandos from the Trading Network proprietary indicator package. So going back over to the profile here, let's go through these targets. So upside targets we just went through. Now downside targets, let's go through with a little bit more detail. So again, we opened, could not hold that 37.53 level as support. My first downside target was 37.49.50. 37.49.50 was essentially this area right here. I was looking at the overnight point of control. Sometimes when you change the ticks per level setting on the market profile, it'll change levels just very slightly. I think I was messing around with my ticks per level, so that's why there's a 1 tick difference between, you know, my first downside target and what you're seeing right here. Just because we had this wider profile. Typically, when we have a wide profile and you have your ticks per level on the market profile set to 1, it's going to be really, really thin and hard to interpret a lot of times. So when I have a wide profile like this, I'll double click on my profile and I'll change the settings, the tick per level setting specifically to 2, 3, 4, etc., depending on how wide the profile is. So just a little side note there. If you ever notice, you know, there's like a few tick differences between my targets and my trade plan and maybe the screenshots that I'm posting or what you see in my videos, it's probably because I'm just slightly altering my market profile settings for visual purposes, essentially, when I'm trading. So that first downside target was hit pretty swiftly in the initial balance. So the second downside target hit was actually a level from a profile from last week. That was the overnight point of control from the December 28th into the December 29th session. So I like that level kind of as a median in between the most recent overnight point of control right here at 49.25 and then the overnight low at 38.25. So that's why I picked that level kind of right smack dab in the middle of there. Third downside target was 37.38.25. You can see that was the value area high from the December 31st session right there, and that also coincided with the overnight low. So that was my third to last, or my third downside target, and my fourth downside target was 37.32.75. 37.32.75 was this level right here that I was interested in. It was basically, I was looking at this overnight VPOC. You guys can tell that I love using these overnight point of control, overnight VPOC. Typically they match up. So this overnight VPOC and overnight POC was 37.32.50. We also had 31.75 as a value area high from the December 30th regular trading hour session. So I liked that quite a bit. So that was my fourth downside target. And fifth, last but not least, downside target was 37.31. Now, 37.31 was obviously just, you know, a point below or point and 3/4 below that last take profit target at 32.75. So I was thinking that, you know, this was a likely area for price to bounce and could be our low of day. Obviously, you know, we went a lot lower than that. So once I saw this level break, especially with single prints, you can see if I zoom in here, we have single prints basically moving down through a ton of price action, which means there's not a lot of structure there. There was not acceptance in that area. There was not a lot of business done. So typically when we have weak structure, that area gets filled in, it gets repaired. And furthermore, when you see price run through major levels like this, we also ran through this, 15, 16, 17 area where you can see that we have a bunch of session lows. See all these matching up? I mean, that's a major area. A lot of people were very likely interested in being a buyer at that level. I think I even tried to buy there, got stopped out, and flipped short. It's not difficult to ride the trend when you see price action like this. This is the opportunity zone indicator here that I have highlighted. Basically just a couple of moving averages that help us keep context. So using the opportunity zone, we can look at the screen very quickly as a visual aid and use this for context. We can say, okay, this downtrend is taking up our entire screen. There is a nice gap between the moving averages, and price is clearly pulling back into the moving averages and rejecting repeatedly. That is again, repeatable price pattern that we can take advantage of and gain an edge from. So this, in combination with the market profile levels, if I pull up the profile levels, you can see overnight POC broke. We used the overnight POC as resistance at the same spot where R2 was essentially, and at the same time, this is London opening range low, and it is the opportunity zone. So there is exceptional confluence in this area where if price is rejecting, then it's very, very likely that we're going to go to this level. If price continues to reject New York opening high, then it's very likely that we're going to go to this level, R1. If price rejects prior range high, which was the line in the sand today, it's very, very likely that we're going to go to settlement, overnight high, overnight POC, and we proceeded to melt even lower through pivot point, through previous overnight point of controls, through value area high from last week, through point of controls from last week, and the trend never changed, and you could ride the trend until we have a clear change in behavior. Now, you want to see a clear change in behavior in an instance like this where we have divergence and then price moves back above the opportunity zone, and it struggled here, right? So this ended up being a bear flag. I don't want to get too deep into a tangent here, but this was essentially a trap. A lot of people got long here, not paying attention to the fact that we were failing to break above previous highs. We tested this previous high, couldn't break above, and then proceeded to continue to melt here. So not to get too far off onto a price action tangent, but this is again how I use this information in tandem. This is how I can look at the profile, use these levels, and then look at my regular chart. I'll just go back here one more time. So looking at the regular chart, you can see, let's zoom out here a little bit. So here's New York open, right? Here's the line in the sand. You can see over here on the right, 37.53. So once we broke this level, you can see this level break on the profile. You can see it also line up with confluent levels with Fibonacci pivots, VWAP, etc., and the opportunity zone, of course. So when you see that confluence, this is kind of your trigger, essentially. You can look at the price action chart to take your entry. You can use candlestick structure in combination with the oscillators, in combination with the moving averages and the Fibonacci pivots, etc., and use all of these tools in combination with one another to increase the probability of your trade. So in the instance that you got in on this op zone test, you could put a stop loss above the prior range high, above R1, above this 50 exponential right here, and you have sufficient protection for that trade opportunity. So let's go back to the profile. We'll recap here, and we will do a little send-off. So just one more time to recap here. Line in the sand today was 37.53, which was the range high, regular trading hours range high from December 31st. We could not hold that level as support and proceeded to break that level and hit our downside targets, which were 37.49.50 right here, the overnight point of control. 37.44.25, which coincided with the overnight point of control once again from the December 28th into 29th session. Third downside target was 37.38.25. 37.38.25 was the value area high from that December 31st regular trading hour session. The fourth downside target was 32.75. 32.75 was this area right here where we had coinciding range high, we had overnight point of control VPOC, we had regular trading hours value area high as well. And last downside target was that 31 level, which was right below here. This was essentially the major area of liquidity, major area of interest that I was looking at, and this 32, 75, 33 area, and the 31 area were my final downside targets. So in regards to the upside targets, the only upside target that got hit was that 37.60 even level, and after that got hit in the initial balance, we proceeded to move down through all these downside targets and much further, even taking out this 36.82 level, which was the December 28th overnight low. We can just take a quick glance into the weekly profile, and you can see that the weekly profile, we're in this area. We didn't quite get there to test the value area low from the week of December 7th, but that is definitely an area of interest. Obviously, we're already back up here at 3,700, so it's going to be interesting to see, if we close the gap, obviously, and then some, and continue to proceed to the upside. But that is to be determined. Got to take it one level at a time. With that said, I really appreciate you guys taking the time to watch these videos and like and subscribe and leave comments. If you do enjoy this content, please feel free to do so. Like, subscribe, check out the links in the description below where you will find our free Facebook group where you can find these trade plans every day, Monday through Friday at New York Open. You can also find our website, thetradingnetwork.io, where you can learn more about getting one-on-one mentorship with me. You can learn about joining our private Discord server where you can watch me and the Trading Network team trade daily at 9:30 a.m. Eastern. You can also get information on the Trading Network proprietary indicator package, which you have seen much of in this video. And last but not least, you can get info on the fundamentals of futures trading, which is our comprehensive course on trading futures that goes over varying strategies for multiple market conditions. Thank you guys again for taking the time to watch these videos, and I will see you in the next one.